Hello everyone, in this video we are going to solve one more and last question on profit per incorporation. So the question is, Chandra Limited incorporated on July 21 with capital of 50,000 rupees 50,000 in equity shares of rupees 10 each, took over a running business of Surya Limited as from April 1st 2022. The purchase price rupees 20,000 was settled on 1st October together with the interest with interest 10% per annum by fully paid up share capitals for rupees 17,500 and balance by check. The company's trial balance as on 31st March 22 was given below. Okay, so the question is fully related to a company which is Chandra Limited, which was incorporated on 1st July. So here they have given a certain new concept here, equity shares related information. Let's see why they have given this information by reading the following adjustments. The particular they have given, see, a cash, share capital, land and building, furniture, cycle. These items are related to balance sheet. Got it? So in this question, a new thing we are going to add. After calculating the profit, we are going to solve or we are going to calculate balance sheet of Chandra Limited. Very easy. That's why they have given all the assets and liabilities related information here. And salaries is an expenditures we are going to show in P&L account. Purchases is given in order to calculate gross profit. Debtors, building upkeep and sundry, these things are related to balance sheet. Rent, P&L account, rent rates and taxes. Director fees, P&L account. Sundry charges, P&L account. Interest to vendors also P&L account. Got it? Next, see, they have given certain adjustments over here. Prepare final account, dividing the P&L between pre and post incorporation period. Yes, considering the following additional details. Stock at end, this is closing stock. So this closing stock, okay, in whichever matters or concept chapters, whenever they have given adjustment, means these adjustment will have double effect. See, stock at end, so we are going to show it in P&L account or while calculating the gross profit, and also in balance sheet. Bad debts also they have given, so in balance sheet we are going to deduct this amount, and again we are going to show it in P&L account. Sales up to this this information is related to sales ratio. Provide for doubtful debts. Yes, this the doubtful debts we are going to calculate it for where we are having bad debt, and that we are going to calculate it. Got it? Next, depreciate building 5% and cycles 20%. So we are going to calculate depreciation. So depreciation amount will be shown in P&L account, and also it will be deducted from book value of the assets in the balance sheet. Got it? So these are the basic things what they have given in the question. Very simple, very easy, but we should know the concepts very clearly, then only it will be very easy. Okay, so here what they have given means, so we need to calculate time ratio first. As usual, we all know that. So how we are going to calculate time ratio? By calculating time ratio. So as usual, pre-incorporation is to post incorporation. Got it? So pre-incorporation, the books of account starts from 1st April. So 1st April to 31st March is our accounting period here. 2. The company was incorporated on July. So June is the pre-incorporation period. Wait. Yes, 30th June is to 1st July. So April to June. April, May, June. 3 months is to 9 months. So 1:3. Time ratio 1:3. Then we have to calculate sales ratio. How much sales they have given in the question? Total sales is 45,000, isn't it? So sales ratio as usual guys, pre-incorporation is to post-incorporation. So pre-incorporation sales, how much they have given? 7,500 is to, among this 45,000 we have to minus 7,500. So 45,000 minus 7,500 will be 37,500. Reduce the zeros. So if you calculate, so it will be 75 ones and 75 5s. If you don't know longer tables are tables means you can use 5 ones. So I have calculated earlier, so I have the calculations. So I have directly calculated 1:5. So while in exams, if you are very confused with the ratio calculations tables means, so both these digits are ending with 5, so simply we can use 5 on the table. So by simplifying this, you will be getting, after few steps, you will be getting 1:5. Got it? So this is the calculation. So we have time ratio and sales ratio now. Got it? So hope you understood this. So we'll move on to the solution. Okay, so in this question we are going to prepare final account. So first we are going to calculate P&L account, that is profit prior to incorporation. We are going to identify the net profit. Then we are going to calculate balance sheet of the company, that is final statement, final accounts of a Chandra Limited. So this is the calculations. We'll all calculate these adjustment while doing the problem itself. Okay. So this is the statement, income statement. This is the format as usual. We are going to solve it in the while calculating the problem. So first always we are going to start with gross profit. So do they have given any gross profit value here? No, right? So we can, how we are going to identify the gross profit? By calculating it. So I'll solve here. Just this is the income statement cell. Here I will calculate. So gross profit nothing but cost of total sales minus gross profit, sales minus cost of goods sold. Here we have total sales, right? 45,000. So gross profit means nothing but opening stock. If you have any opening stock means, so opening stock, add purchases, next less closing stock. Got it? This is how we are going to calculate. So we don't have opening stock, so we have purchases 48,500. In trial balance they have given, minus closing stock, that is 14,000. We have that value in the adjustment. Got it? So if you minus these values with 45,000 means the gross profit will be 10,500. Got it? So wait, yes. So gross profit total is 10,500. So sales ratio, on the basis of sales ratio we are going to calculate, isn't it? So sales ratio, how much we got? 1:5. So if you calculate gross profit 10,500 into 1/6 means the value will be 1,750 and 8,750. This is the value. Next we have one more income in the question. If you have the question means please read the question clearly. See here we have an income rent from tenant. This rent from tenant is in credit side. Credit side means what? It is an income for the company. So we have to add it in the income side, isn't it? Credit side. But in this format we are going to add it to gross profit here only. So after gross profit, rent we have only 600. I am writing this amount in order to know the values, guys, or else we'll be get confused, isn't it? So rent, as usual, we are going to bifurcate on the time ratio. So time ratio is 1:3. 600 into 1/6, nothing but 150 and 450. If you total this, so 1900 and here 9200. Total A. Got it? Next, after total A, we are going to identify expenditures. So expenses, first one. So we are going to see all the particulars which they have given in the trial balance. We are going to ignore the balance sheet items. We are going to consider only P&L items which I have marked while reading the question. So first one we are having salaries. So salaries, a total salary is rupees 1,200. So this 1,200 divided on the basis of time ratio 1:3. So 1,200 into 1/4 will be 300 and 900. Next we have rent and rates taxes. I'll just mention rent. So we have two rents, one is income, one is expenditures. So expenses, rent is again it is 300. So rent is also on the basis of time ratio 1:3. So 300 into 1/4 75 and 300 into 3/4 will be 225. Next we are having building upkeep. It is an expenses. So this valued at 150. So it is or administrative expenses. So we are going to consider on the basis of time ratio 1:3. So 150 into 1/4 will be 38 and 112. Next we are having directors fees. Directors fees are remuneration. So it is full and full actual post. We are going to directly write it in post incorporation 900. Next we are having after directors fees sundry charges. sundry charges. On the basis of time ratio, we are going to divide 1:3. So sundry charges is total amount is 120. So 120 into 1 by 4, 30 and 90. Next we are having bad debts. So the adjustment what they have given means bad debts rupees 200, within brackets they have given, including rupees 50 on debtors taken over from vendor to be written off. So that 50 rupees is taken by the what they have mentioned. They told that the 50 rupees is taken by the vendor. It seems that particular 50 rupees is fully related to pre-incorporations, and remaining values are related to post-incorporation. So bad debts total 200. Out of the 200, 50 rupees is related to pre-incorporation and remaining 150 is post-incorporation. Next we are having provision they have given. So directly we are going to maintain provision. When we are going to maintain the provisions and doubtful debts? Whenever we are when the company is actually incorporated, then only we are going to maintain all those things, isn't it? So directly we are going to write it on post incorporation column, total 250. Got it? Next we are going to calculate depreciation. So depreciation what they have given. So building 5% and cycles 20%. Building is valued as 8,000. Just I'll show it here. Yes. So building 8,000 into 5% means 5 by 100, that is 400 is the depreciation value for 1 year. Next we are having cycle at 20%. Cycle is valued at 1000. So cycle 1000, right? Yeah, 1000 into 20%, so 200. Got it? This is the value of depreciation. Got it? So wait, I forgot. Yes, in that first point, building, I think handwriting is very clumsy. $400 and cycle 400, sorry 200, total 600. This 600 is being divided on time ratio 1:3. 600 into 1 by 4, 150 is the value, and 600 into 3 by 4 will be 450. Got it? So almost all the expenses were being calculated. So we'll find the total expenditure. So if you add all these expenditures means we'll be getting a value, right? So total expenses will be 1143 and 3397 for post incorporation. This is the total expenses. Now we are going to calculate net profit yes, this net profit will be transferred to we'll find that. So how we are going to calculate net profit? Total A, that is total income minus total expenditures, total A minus B. Total A is 1900 minus 1143. So first one will be always pre-incorporation profit will be transferred to capital reserve, isn't it? So 757 is the value. Next we are having post incorporation profit, isn't it? That will be transferred to P&L account. So that is 9200 minus 3397, that is 5803. So this is the profit which we are going to transfer to P&L account. So last few videos we have solved the problems, we have completed problem till here, isn't it? But in some cases there is a 0.01% of asking balance sheet. So very simple, balance sheet is very simple. There will be no working notes or no schedules has to be calculated. Simply we have to solve the balance sheet. Either we can solve in vertical column or in horizontal. That is not at all an issue. So the simple method I am going to show here as usual. So liabilities amount, assets amount I have calculated. If you want to calculate it in a vertical manner means you can solve in that way also. Okay, so this is the balance sheet, old balance sheet format. So I have not written as financial statement. If I have mentioned financial statement means I have to follow the schedule 3 format. So that's why I have written as balance sheet over here. Got it? So as usual we are going to start with share capital 22,500 they have given in the question. So next after capital we are going to write the reserves. In question or in trial balance they have not given general reserves or security premium or capital reserve, redemption reserve. They have not at all given any reserve, but we have capital reserve here, isn't it? So this has to be transferred to balance sheet, isn't it? So capital reserve after completion of equity share capital we have to write reserves, that is 757 as the value which we have calculated earlier. Okay, next after reserves we are going to write P&L account. This is post incorporation profit 5803. In question we are having no other long term loans, nothing they have given, but in trial balance they have given sundry creditors. So sundry creditors 3000. Got it? So this is the information what we have in the trial balance. Now asset side. So beginning itself we have cash 180. Next land and building. So land valued at 8,000 less depreciation 400, that is 7,600. Next we are having furniture and fixtures I write 750. Next cycle. For cycle we are having depreciation, isn't it? So depreciation we have to be minus it. It is 200. Value will be 800. Next, we are having stock valued at 14,000. Next we are having debtors. For debtors also we had adjustment. We should not write the value just blindly. We are having 4,500. First we have to minus the bad debts. Bad debts is 200, and we are also having provision for doubtful debt, so 250. If you minus it, the value will be 4,050. Next we are having bank. 4,680. So see here what I have done here means I have separately mentioned cash and bank, or else we can directly write cash and bank directly, that is 4,860. Both the things are correct, but I have just mentioned differently. So let's check the total now. So total liability side is 32,060. If you count here means we have to add all the assets. So if you add all the assets means the asset side is also 32,060. So liabilities and assets values are matched. So actually in terms it is tallied. So our problem is correct. We have correct values. Our calculation is perfectly correct. Okay. So hope you all understood the concept of profit prior incorporation. So if you have any doubts, comment in the comment section.